Hey guys, welcome back to this week's Did You Know Real Talk with Nina and Christine, presented by NextHome Shore Success. Last week we talked about closing costs, and this week we're answering one of the biggest questions buyers ask us all the time. What do you actually need to qualify for a home in New Jersey? A lot of people assume buying a home is out of reach for them. But the truth is, with the right plan, it may be a lot closer than you think.
Exactly. Qualifying for home, it's not just about one number. It's a combination of your credit, your income, your debts, your savings, and choosing the right loan program. Because when buyers understand what lenders are looking for ahead of time, the whole process, it becomes a lot less stressful and more achievable.
Now let's start with credit. Credit score requirements can vary depending on the loan type and lender. Conventional loans often prefer scores around that 680 or higher, but some lenders can actually go as low as 620 for conventional loans. Now, FHA loans can have a credit score requirement as low as 580, while VA and USDA loans, that's a tongue tire, the credit score requirements for those loans can vary by lender. Now, in general, the higher your score, the better chances you have for stronger rates, better terms, and a lower monthly payment.
And then there's your debt to income ratio, or DTI. Now, that's the percentage of your gross monthly income, meaning what you earn before taxes and deductions, not your net, because the net is what you take home after taxes. So it's the percentage of your gross that goes towards debts like credit cards, car loans, student loans, and your future mortgage payment. So many conventional loans, those lenders, they're going to look for that number to be around like 43 to 45% or lower, while some FHA loans can go higher, sometimes around 50 or up to 56%. And it really just depends on the lender and the overall loan file.
Exactly. Now, in New Jersey, the monthly payment can be impacted by many things a lot of buyers underestimate. Property taxes, HOA fees, and homeowner insurance is just examples. Now, New Jersey has some of the highest property taxes in the country, guys. And if you're buying in a community with an HOA or a homeowners association, those monthly HOA dues also count towards affordability. Homeowners insurance premiums are another major factor, as they can vary based on the insurance carrier, the property itself, and the specific town or location. That's why two homes the same price can have very different monthly costs depending on taxes, fees, and insurance.
Oh my God, you guys, and I'm in an HOA. That's literally no joke. Okay, but now let's talk about cash needed up front. Many people still think that you have to put down that 20%, right? But that's a common myth. Some conventional loans, they can allow as low as 3% down. FHA loans can be as low as 3.5%, and then eligible VA or USDA buyers, they may qualify for 0% down financing. It really just depends on your program.
But your down payment is only one piece of the puzzle. Buyers should also prepare for closing costs, home inspections, appraisal fees, homeowners insurance, and sometimes escrow deposits for the taxes and insurance. That does tie directly into last week's video about closing costs, because understanding those extra costs is just as important as knowing the purchase price, you guys.
And so depending on the loan and your financial profile, some lenders, they may also want to see mortgage reserves after closing. And, that just means having funds left in the bank equal to around 2 months of your mortgage payments. And it's simply an added layer of confidence that you'll still be financially stable and okay after buying your home.
And another thing buyers should understand is that some loan programs may include additional monthly financing costs. Those fees help reduce the lender's risk when a buyer is putting less money down, which is what allows many people to buy sooner instead of waiting years to save up a large down payment.
So for example, with a conventional loan, putting less than 20% down often means PMI, or private mortgage insurance, which is included in the monthly payment until enough equity has built up. With FHA loans, there's an MIP, which is mortgage insurance premium, where part is paid at closing and then the rest is added in monthly.
And with FHA, if you put less than 10% down, that MIP usually stays for the life of the loan. If you put 10% down or more, it can typically drop off after 11 years. Now, USDA loans usually have a guarantee fee, which is essentially part paid up front and part included in the monthly payment.
And for eligible buyers, VA loans, they're a major benefit because they don't have monthly mortgage insurance premiums. But every loan, program, they work differently, and it's really important to review your full payment, not just the purchase price.
Now, income documentation is another major part of the process. Be prepared to provide your recent pay stubs, W-2s, tax returns, bank statements, and a valid photo ID. If you're self-employed or have variable income, there may be additional documentation needed, so it helps to get organized early.
And do not forget to disclose your current debts: credit cards, student loans, personal loans, car payments. These all play a role in your qualifying because, even if you earn a strong income, too much monthly debt, it can really affect what price range is going to work best for you.
Now, one of the smartest first steps any buyer can take is getting pre-approved before house hunting, which means the lender has received your documents, pulled your credit, and reviewed everything in order to issue a conditional approval. It gives you a realistic budget, helps you shop with confidence, and makes your offer stronger when you find the right home. Sellers are also far more comfortable with buyers who already have financing lined up.
So guys, if this sounds like a lot to navigate, it is, right? But that's why we're here, and that's why we're hosting our upcoming seminar. It is a first-time homebuyer seminar. We're going to break everything down for you in simple terms, from financing and grants to inspections, contracts, closing costs, and basically what you can expect every step of the way.
So yes, join us Wednesday, May 20th, 2026 from 6 p.m. to 8 p.m. Now, the date and time and the location is now up on the screen, so please join us that day. It's going to be packed with a lot of useful information. And if you have any questions about buying or selling a home anywhere in New Jersey, or you actually need help finding a good, mortgage representative to talk to about any of this, please reach out to us. Our contact information is up here on the screen now as well. We'd be more than happy to, guide you through this process.
Yeah, for sure. So thank you all for listening and tuning in. Please stay tuned for next week's Did You Know Real Talk video, where we will bring you more helpful real estate tips and information.
Yes, and please follow that YouTube channel of ours, guys, at nhssnina.christine on YouTube.
Thank you all. Have a wonderful day. We'll see you next week. And please don't forget to like, share, and follow.
Bye.